Perth just beat Melbourne, but here's why smart investors are watching the underdog. That's right guys, Perth just overtook Melbourne in medium house prices. Let that cook for a second. The city of mining booms, FIFO workers and youths with bunny stickers just beat one of the world's most livable cities on property value. If that doesn't tell you markets are driven by cycles and not vibes, I don't know what will. In this video, I'm breaking down why Perth outperformed Melbourne for the first time in over a decade. The raw numbers, yield comparisons, and the rental dynamics you need to see right now. And why Melbourne is shaping up as the comeback king. And what smart, data-driven investors should be doing right now while the headlines keep people distracted. And also the top 5 suburbs in both Perth and Melbourne based on CoreLogic 2025 data in July. And also the real client case studies of wins and losses. That's right guys, strap your seatbelts on. This isn't about state pride, it's about seeing the past hype and playing the long game. Firstly guys, the numbers don't lie. Perth has officially overtaken Melbourne. According to PropTrack May 2025, Perth medium house prices is $787,000. For Melbourne medium house prices, it's $782,000. That's a $5,000 gap that would have sounded insane 5 years ago when Perth was 40% cheaper. Now to quote Eleanor Clark from PropTrack, she says, quote, Perth's relative affordability was a key attractor, end quote. But to counter that from CoreLogic RP data analysts, they say, quote, Melbourne has stronger fundamentals but short-term drag, end quote. So guys, this is my take. Perth's winning the sprint, but Melbourne's training for the marathon. But let's keep moving on with the data. So secondly, you might be asking, what drove Perth's surge in capital growth? Well guys, this is a simple formula. Affordability plus yield plus FOMO. In 2020, Perth medium house prices was only $500,000 and Melbourne's medium house prices was $875,000. That's a 75% price difference. And when interest rates spiked in 2022, East Coast investors got priced out and started looking west. Then when you look at your rental yields over 5.5% compared to, for example, Melbourne's sub 3%, it's a bloody easy choice that people were heading towards Perth rather than Melbourne. Now to quote SQM Research, they said, quote, investors were chasing rental yield and Perth delivered, end quote. But to counter that one-sided opinion, WA Economist Observer, they said, quote, this growth isn't sustainable without wage growth, end quote. So you might be asking, Q, what are we looking at the moment with this data? Well, to bring it to simple layman English, Perth became the Audi version of Brisbane. Just like the German version of the cheap supermarket, they deliver in terms of property, the same games, but better margin. Now, let me give you some examples. The top 5 suburbs I'm going to list right now according to CoreLogic 2025 data. Number 1, Ellenbrook. Like this is from a real example. One of my clients who used a buyer's agent, they bought in mid-2024. It went up by 12% in 10 months. And then Byford, B-Y-F-O-R-D. Maybe I can't pronounce it, but Byford. In this suburb right now, they have strong family demand and the entry point was $590,000. And also on top of that, with the rental yield between 5.5%, it offered stable cash flow for investors. Next, third on the list, Baldivis. Can't pronounce it again, but Baldivis. A client I spoke to 6 months ago, even though they struggle with tenant turnover, but when we did our 6 month review in terms of their property valuation, they saw a 9% growth. Fourth on the list is Alkimos. And in terms of Perth, when you think about Alkimos, it's like coastal, lifestyle suburb. Now this client worked with a buyer's agent and also a financial planner and accountant to set up a trust structure. They just flipped a duplex size in 6 months. And do you know what the profit was? $150,000 per duplex. Now the fifth one is Wellard. W-E-L-L-A-R-D. Again, I can't pronounce Perth suburbs. I'm from Sydney, right? This guy was a FIFO investor, like fly in, fly out, right? He's really busy. Obviously, he contacted me on TikTok because the only time that he was awake was like 2 a.m. and he was watching my videos. And you know me, I'm online all the time. So he contacted me. We worked with him with a financial planner, an accountant, and a buyer's agent. He bought a property in Wellard about 14 months ago when we were working together. We did a valuation today. We saw a $70,000 equity growth on that exact property. And there was no renovations done. Now moving on, thirdly, Melbourne's pain is real. Let's look at Melbourne. According to PropTrack data in 2025, Melbourne prices are still 3% below the 2022 peak. At the moment, according to SQM research, vacancy rates are now below 1.2%. And in terms of rental yield, rents are up by 11.4% year on year in the inner suburbs of Melbourne. And right now, you investors might be looking at this and go, that's okay. But you got to remember, guys, Melbourne did cop it a lot in the last few years, right? There was the lockdowns, the tax hikes, for example, the land tax, absentee owner levies, and also on top of that, a lot of rental compliance changes. To quote another economist, Jealous Craig, he said, well, they said, because Jealous Craig is actually a company, they said, quote, the pain has already been absorbed, but the rebound starts now, end quote. But to counter that, so I'm not offering a biased view of Melbourne, the Property Investors Council of Australia counters, quote, investor confidence is still low due to policy instability, end quote. So right now, guys, this is my savage take, right? You can cry about policy or see the discount for what it is. For example, there is a price drop in this year as opposed to Perth medium house prices. This might be an opportunity or it might be a threat to existing property portfolio. But if you're a new investor, this is a chance to buy quality assets before everyone else wakes up. So if you've been waiting for this in this video, these are the 5 Melbourne suburbs that I think are gonna go crazy. And right now, this is according to CoreLogic 2025 data. I'm not making this crap up. Number 1 is Essendon. So what happens is one of my clients bought a dual living home in 2023 when we were working together. Now, this was a double-story house, right? Now, he rented both levels at 6.2% gross yield, which is top and level together against the property value was 6.2% rental yield. Now, at this moment, even though it was a pretty big purchase, it is still yielding 6.2 to 6.5% because in next month, he's going to hike the rent up by $200. Second on the list in terms of suburbs in Melbourne is Manningham. All right. Now, there was a developer that I worked with 9 months ago. He bought an old house on an upper Fixer Street, and then he subdivided the land, which the council took bloody 6 months, right? And now he flipped it for $300,000 in net proceeds. Now, a third suburb to look at is Whitehorse. There's this long-term client that I've been working for the last 10 years with. He saw low growth, but he had a high tenant retention and cash flow. The yield was 5.5 to 6%. So sometimes, guys, even if the growth is slow, it doesn't mean you need to sell it, especially if the rental yield is good. And now another 4th suburb on the list, and again, this is not financial advice, this is just what's happening, what I'm seeing in the market with my clients, is Glen Waverley. Now, this joint over here is a busy market, right? I had a cautious buy about 12 months ago, bought a townhouse there for $1.4 million. We did a market valuation day. It only went up by like $50,000. Right? And the only reason I'm mentioning this suburb is because based on insider knowledge from him, he thinks this suburb has a lot of value, and that's the reason why he's not selling and he's still holding. So it's something that you might want to add in your cards. And lastly, the 5th property is Preston. Now, one of my newer clients, which was like 16 months ago, he bought a property over here, and in our anniversary review today, when we did a property valuation, it went up by 8%. And in terms of the rental yield, it's at 5.1% within 12 months in terms of buying this. So right now, guys, I probably threw a lot of suburbs, you threw a lot of numbers at you, and you're probably getting confused. Let's slow down and talk about the 4th part of this video. Let's talk about numbers, yields, growth, and entry costs. Because right now I'm getting a lot of DMs from you guys asking me, hey Q, maybe you should slow down a bit, maybe you should give some examples, a lot of noobs out there. Let me do some math for you, right? For example, if you bought a property in Melbourne, say for example, our apartment, it's worth $620,000. And if you're buying as an investor, the rent would be probably $550 a week, which is about 4.6% gross yield. Now let's compare this to a Perth house. Let's do Melbourne versus Perth, like Street Fighter mode, right? So we have Melbourne over here. On this side, we have Perth. This house that you probably decide to buy this and not the Melbourne one, say it's $780,000. You got a bit more capital in your pocket to get up to $780,000. Now this, as an investor, you can rent it out for maybe $670 a week. That averages it out, if you do the math, it's about 4.5% gross yield. And right now you have these 2 properties. For example, your buyer's agent, which we work with, would offer this to you and let you compare, right? Let's look at the difference. On this side, they'll say to you, Perth's had its run, right? And on this side of the Melbourne property market, they might say to you, Melbourne's rental market is still tightening. Now, right now, stand back a bit. Assume a 6% capital growth over 5 years. Which one would you buy? You have a Melbourne apartment for $620,000, and in 5 years, it will be $830,000, according to my maths. When we look into Perth, the $780,000 house that you bought, for example, you had more cash and you bought in Perth, in 5 years' time, if you do the maths again, it's $1,040,000 in 5 years. Now, if you look at both sides, which one would you buy? Now, step back a bit and look at the data, right? Let's decide which one you should buy, right? Let's look at Melbourne. Right now, if you bought the Melbourne apartment, the pros is it has a higher upside if bought at the current dip with better depreciation and longer term capital gains if the rates drop. And if you've been watching the RBA, the last 2 cash rate announcements, they kept it on hold. But in August, in November, or even in December, there might be another potential rate drop. And remember what I just said to stand for my top 5 suburbs? One of my clients bought in Preston with a 10% deposit, and right now I'm already helping him refinance and cash out in 9 months due to its uplift. While if you look at the Perth property market, has this reached its peak? And will it hit that $1 million mark with everyone rushing to Perth whilst ignoring Melbourne? You decide. Again, not financial advice, you decide. Which now I'll segue to the 5th part of this video. The main question on all your mind. What should strategic investors do right now? Now, again, this is tips I get a lot from the buyers agents I work with, a lot of property investors in Melbourne and Perth that I work with. Right, they're telling me at the moment, look for inner to middle ring Melbourne suburbs with low stock turnover. Especially you can find like lots that have duplex potential, and especially if you can look in fringe areas with transport upgrades. Or if you can't afford a land or a house with a land on it, you can also look for apartments near uni or hospital corridors. And guys, here's the bonus tip. Watch for rezoning and small developer sell-offs due to high interest rates. These guys are borrowing from private loan shark lenders, which are currently charging 3% per month. And sometimes when they're desperate, they will sell a vacant piece of land for a very low price. Because I'm telling you right now, Melbourne still has a lot of distressed landholders, while for Perth over here, has been cleaned out already. Don't even think about it. You will not find any vacant land in Perth at the moment. So right now, guys, here comes the roast. The mob in Canberra keep dangling affordability carrots in one hand and handing out land tax hikes with the other hand. And meanwhile, most first home buyers are being scared off from Melbourne due to the whole media doom and gloom of Melbourne land tax raise and higher fees, while savvy investors like my clients are quietly scooping up premium assets at a discount. So if you're watching while the media headline says, oh, Perth is winning, but guys, let me tell you, you're not in it for the medals. I want you to be in it for the compounding. And sometimes you gotta read between the lines of what the media is trying to show you. So guys, right now, this is my closing statement. If you're chasing hype, go west. Go to bloody Perth. But if you want to get in before the rebound, Melbourne is the move right now. And again, not financial advice, but this is what I've been sniffing in the air. The wind of change is moving to Melbourne. But I'm telling you right now, guys, the price gap won't stay like this for long. So if you want more information, you want to get connected with my buyer's agent, my financial planners, and my accountants to build an A-game strategy, I suggest to you, you either book a 50-minute strategy call or a 60-minute deep dive with me for me to create a holistic lending solution and surround you with the independent experts for you to do your due diligence to see whether you should buy in Melbourne or in Perth or somewhere else. And right now, I'm nearly booked out. If you don't believe me, you can go to my booking system. You can see that I'm booked 2 or 3 weeks in advance. But that is a testament to my no BS strategy I give to the thousands of first-time investors that I helped reposition themselves to end the generational poverty curse in their family and build generational wealth. But hey guys, if you're not ready for this, just hit the like button, hit the follow button for more videos like this, and smash the share button. Share this video to your mates because knowledge is power. Again, guys, thank you for watching another episode of That Property Wars, and I'll see you in the next few days.